Welcome to this session. I promise that I will share a very effective trading strategy. This is a trading strategy that I've been backtesting with time, and I've seen that it really works wonders. And this trading strategy is basically a combination of trend lines. Okay, when we have a combination of trend lines and the areas of demand and supply, or what we may call order blocks, okay, either bullish or bearish order blocks. Okay, so with this strategy, basically what you need to do is, for instance, you need to identify the trend. Okay, the first thing that you need to do is to identify the trend. Okay, the first thing that you need to do is to identify the trend. So that is the first step. Step number one, identify the trend. Identify the trend. So after you have identified the trend, then now step number two, it's for you to identify a trend line. Okay, identify a trend line in that trend. Whether it's if it's an uptrend, you identify an uptrend line. Whether it's a downtrend, you identify a downtrend trend line. Okay, and then step number three is that now you look for areas of supply and demand. Okay, areas of supply and demand. So if it's a bullish market or an uptrend, we want to look for areas of demand so that we can buy. If it's a bearish movement, that is a downtrend market, we want to look for areas of supply so that we can sell. Okay, so let's begin maybe probably with an uptrend. When we have an uptrend, okay, so basically you'll find that the market will tend to move in this manner. Okay, so it will tend to behave in such kind of movement in this kind of market. Okay, so basically respecting this trend line. Okay, respecting the trend line. So once you have such kind, you identify now this is an uptrend and this is the trend line. You draw the trend line. Then basically what you need to do next is to identify. Okay, is for you to identify areas of maybe supply or demand. Okay, so in an uptrend, basically we want to look for areas of supply or for areas of demand. Okay, so at this region, okay, as these regions where the market reaches, you'll find most of the time it will be respecting an area of demand or a bullish order block. Okay, so these areas where the market retraces, these are the points that you want to look where we have the areas of demand or the bullish order block, so that now you can wait for the market to retrace to that level, and now you look for your buy entry. These will basically increase your probability. Remember, we said that when we are buying, okay, when we are taking a trade, basically we want to ensure that we have at least two confirmation, more than two confirmation. That is a minimum of two confirmation for you to confirm that it's a high probability trade setup. Okay, so in a downtrend, when we have a downtrend market, so this is how a downtrend market moves. So we have this kind of moves. Okay, so this is the kind of moves we want to see, or that define a downtrend. So along these, you can be able to identify this trend line. You can be able to identify a trend line along that point. So basically that's how it will look like. So, okay, so you want to draw that trend line. So the moment you identify the trend line, then you need to keep looking for these levels where the market is reversing. You'll definitely find that these are areas of supply. Okay, these are areas of supply where we have bearish or bearish order block, or maybe bearish engulfing candlesticks pattern. Okay, so they increase the probability of you taking trades at these levels. Okay, so these are the rules. I repeat again. Number one, you identify the trend, then you try to draw a trend line, or you identify a trend line. Okay, so you should identify a trend line. So this is identify a trend line. So once you identify a trend line, now try to locate areas of supply. Whether it's a downtrend, you locate areas of supply and wait for the price to retrace to those levels for you to take a sell. If it's an uptrend, you try to locate areas of demand. You wait for the pullback, because the pullback will definitely come to along those areas of demand, and then you buy. You look for your buy entries. Okay, so it is a very simple strategy, yet very effective. Remember, my goal, number one goal, is that I have always tried or wanted to simplify Forex to the best way possible, such that even a beginner can be able to learn Forex, appreciate Forex, and be able to make money even as he or she advances his or her knowledge. Okay, so let's go to the charts and we try to see or try to locate this kind of pattern that I've talked about, or this kind of this kind of a trend, the uptrend or the downtrend. We try to locate at the areas where the market is retracing, where it reaches before going up. We see whether it respects this strategy. But like I told you, it's something that I've been back testing, and yeah, it's quite profitable. It's quite profitable. Okay, so let's dive into the chart and see probably what we can get from the charts. So at this level, you can see we have you can draw a trend line at that level. We have a very nice trend line. So you can see that trend line. Okay, so like I said, we need to first of all identify the trend. So this is an uptrend. Then you can be able to locate or draw a very nice trend line. Okay, so we begin even we begin even from the lowest point here. So you can see when the price came to this level and pushed up, the retracement to this level, it came to around these areas. Okay, so basically, according to ICT, the entire of these is an order block. Okay, according to ICT, the entire of these is an order block. This is an order block. So you could have taken a buy at that level. Okay, then again, you can see when the price pushed up and retraced back, it respected this area of supply of demand. Okay, we have an area of demand here. We have this bullish candlestick. We have this bullish engulfing candlesticks, and I can see the first time it threw a wick and went up, which was a nice entry again, but you can see it retraced for the second time to respect this area and went up. Okay, and it went up. Then you can see as the price touches this trend line. Okay, as the price touches this trend line at this level, you can see again it's respecting an area of supply or an area of demand. This is a bullish engulfing candlesticks pattern, which creates the demand zone. Okay, so again, as the price goes up, comes back to this region again to respect this pattern, we have a bullish engulfing pattern, which creates a demand zone at that level. Then we can see again, maybe probably at these levels, this is also an order block. Okay, this is an area of this is an order block. You can see the price reached that level and pushed all the way up. So basically here you can say that this strategy basically increases your odds of taking the trades, and especially when you're trading with the trend. Okay, when you're trading with the trend, it helps you to know or to trade in the trend. So when I'm trading this kind of strategy, I only want to be trading the bullish engulfing candlesticks or the order block, okay, which creates these areas of demand, okay, because it's an uptrend. So I want to align myself with the trend. I want to align myself with the trend being an uptrend. Okay, so let's look at another example. So here we can see it was a very nice downtrend. You can see it's a very nice downtrend. So let's try to draw our trend line. Okay, So we try to draw our trend line, and as you can see, when I'm drawing this trend line, I'm not struggling, it comes automatically. So anytime you find yourself struggling or trying to force points to meet up, just know that that is not an effective trend line. Okay, so now we have identified the trend, it's a downtrend, and we have identified the trend line. Okay, so with this, now we try to look at now the areas that we are talking about. So this is when the price came back to this level. Okay, so you can see at this level, this is an area where we have an order block. Okay, it's an area where we have an order block. If you go to the higher time frame, you might find that this is only a single candle. It's only a single candle, but here we have consecutive buy candles, meaning that this can be it's an effective area of an order block. Okay, so you can see the trade came back to that area and it retraced back, it is sold. So this creates a very nice entry level. Okay, and remember, the reason why we are saying this is a very effective strategy, remember when you are trading these trend lines, when you're trading the trend lines, this could be the first touch, this is the second touch. So we could have started selling probably from around this region. Okay, from around this region, when the price comes to retest that for the second time. Okay, for the third time. So you can see this is where we could been taking our sell entries at this level and then this level. But because of this strategy, which trading the trend lines alongside the areas of demand or supply, for this downtrend, we trade the trend line along with areas of supply because it's a downtrend. So it gives you very nice entries and you are able to catch a trend at the immediately when it begins. Okay, you're able to catch a trend immediately when it begins. So look at this level. At this level, we have a supply zone. So we have this bearish engulfing candlestick pattern, which creates this demand zone. So you can see the price came all the way to that level, gave us that week, basically due to this demand zone, and the prices pushed all the way downwards. Again, look at this level. We have a bearish engulfing, which creates the supply zone. You can see the price came all the way up and respected the trend line and continued to rally to go downwards. Again, you can see at this level, okay, you can see at this level we have another bearish engulfing, which creates this demand supply zone, and you can see the price respected that region. The price went all the way down, then came back to this region to respect the supply zone and also the trend line. So you can see at this level, you can see what happened at this level. So all these now, this big candlestick becomes a supply, an order block. Okay, all these that big buy candle creates an area of an order block. We can call it an order block or a mitigation block. Any can do, as long as it's between the difference between an order block and a mitigation block is that mitigation blocks basically happens within a trend. Okay, the order block happens at the beginning of a trend. That is the highly effective order blocks. We shall discuss about that, and basically that is the concept from ICT. That is not my concept. So I acknowledge the author of the concept, the ICT. So again, at this level, we can see we have a region there. And the reason why price pushed downwards and then came to this supply zone, and you can see the price pushed all the way further. What I'm talking about is this consecutive sales candle here. They create that region of supply. Okay, and now we have the price pushed downwards and came back to that region to respect the trend line, and there was a sell. Okay, there was a sell at this level. Again, we have another pattern. Okay, we have another pattern around that point. We can take all the way to this because these are consecutive candles. They are consecutive buy candles following each other. So this is a region of supply. You can see the price came all the way down and then came to retest that region and respecting the trend line as well. Okay. So at this level also we have these consecutive sell candles. Okay, so all this becomes a region of interest, So the first time the price came, second time, and lastly the price pushed all the way down. Okay, the price pushed all the way down. So from that you can see how you are able to follow a trend all the way to the lowest level. But let me put a caution at this point. When we have this kind of a pattern here, this is a single pattern, especially when we have the engulfing. It becomes high probability to take your trades at the last candle in this engulfing pattern. This becomes high probability, okay? But when we have this kind of a pattern where we have consecutive consecutive buy candles, when we don't have a specific let's say when you don't have a specific bullish engulfing, a clear bullish engulfing, like in this region, then this is whereby we consider now the consecutive sell candles here. And the entire of this is a region, okay? It's a supply. They create supply areas, but they are not as much as effective as when we have this type of pattern. Okay, when we have this engulfing pattern. So you need to distinguish that, because you can see, like with this one, the price retested this region for some time before the sell-off. But when we have the engulfing, okay, like here we have this engulfing again. Okay, here we have the engulfing, this buy candle and the sell candle. Okay, but now the price did not reach the engulfing area. Okay, it did not reach the engulfing area. So with the concept of consecutive buy candles, because these are consecutive buy candles, so now you can basically be able to tell that all this is a region of supply. We have two consecutive sell candles, okay, buy candles. But if the big candle here was a sell candle, then we could only consider the last candle which creates the engulfing, and this becomes a high probability. We wait for the price to reach here. If it doesn't reach there, then it's well and good. That means it's a trade that is gone. You don't chase the price again. We wait for the price. Okay, so let's look at one more example. So here we have a trend line, a trend. So this is an uptrend. This is an uptrend, and now we try to draw the trend line in that uptrend. So that is the trend line. Okay, that is the trend line. That is the trend line in that uptrend, right? So having drawn that trend line, now we look at this point when the price is coming back to retest the trend line. So the first point is around this level. Okay, we have that level when the price came to retest the trend line, and you can see around that level, this is an order block. Okay, this is an order block. Okay, the entire of this region, it's an order block, right? It's an order block. So again, we can see at these levels, okay, when the price came to retest back this region, you can see what we have at this level. Basically here we don't have, you can see these are continuous buy candles. They are continuous buy candles from this side. But again, this is an area of, this area, it was resistant, right? This area was resistant. So the resistant was broken out and the market was coming to retest what? The resistant, okay? The reason why I always say, or emphasize, that you need to look at the market with a 360 degrees eye, or in 3D, 3D, okay? So that you can be able to appreciate how the patterns are forming, okay? So that you can be able to appreciate how the patterns are forming. So at this level, again, when the market comes to retest the trend line, we can see we have a demand area. We have a demand area along that point. So there is an order block. You can see this small sell candle here. So it creates an area of an order block. Okay, until now, finally, there was a breakout. So these points, they could have given you 3 good, nice entries. Okay, even this, the last point here, this gives you around 134 pips, which is quite good. Okay, which is quite much okay. So this strategy is very effective. It's very effective. And let me repeat the rules. So the rules of the game, number 1 is to identify the trend. Once you have identified the trend, then you are able to locate the trend line. You're able to locate the trend line. Once you locate the trend line, then now you're able to look for areas of supply or demand depending on the trend line. So if it's an uptrend, you'll be looking for these areas of supply, and then you wait for the price to come back. It has to retest the trend line and also test this area of demand. Okay, so if it's a downtrend, we locate the downtrend, we draw the trend line, and now you look at these areas when the price is coming to retest the trend line. So we want to see areas of supply. Okay, so these are the areas of supply when the market now comes to respect the areas of supply and also respecting the trend line at the same time. Okay, so that's it from me today. It's just as simple as that. So what I want you to do, the ball is on your side. I'll want you to backtest that strategy, backtest it in your DMOL account until you become confident trading that strategy. And I believe it will help you in terms of increasing your success in the financial market. This strategy can be traded in all financial assets, gold, commodities, currencies, stocks, etc., etc. Okay, so thank you so much. I'll continue posting more trading strategies, very simple and easy to understand trading strategies, so as to ensure that you succeed in your trading journey. Okay, my happiness is when I see my students succeed, and that gives me the motivation to keep even doing these videos. Okay, so ensure you comment, you like, you subscribe, and also share with others so that they can benefit as well. So with that being said, until next time, keep it safe. Let us meet at the top.